Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for March 30th, 2018. As usual, we have similar setups. We're looking at stocks, bonds, bond proxies, the dollar, gold, commodities, oil, natural gas, and we'll finish with cryptos, which really collapsed this week, especially Ethereum. Okay, so let's continue to S&P 500. So here is S&P 500 futures on a daily time frame. So I'll just be basically assuming that we're in a daily time frame. So I'm going to stop saying that basically. This is a bullish chart. Without me even going into any kind of market breadth analysis or correlation analysis. This is just straight up bullish chart. Why is this a bullish chart? Several features of this chart make me think that this is a bullish chart. Number one, these fresh all-time highs in January of this year. Whenever you're in doubt that the chart is bullish or bearish, simply ask yourself, did we just make a fresh high or did we just make a fresh low? If we made a fresh high, chances are this chart is bullish. Here we're seeing a normal looking pullback. You can also see this 4 indicator lines. So these are support resistance lines that are calculated using my indicators, and you can find them at TradingView. They're called MasterCharts Trading Long and Short. So currently what I'm seeing here is I'm seeing a minor support break, and so far, for example, here on the 27th of March, we can see a resistance manifest itself. So far, I mean, ideally, I would like to see a close above this blue line, something similar to what happened back on the 6th of February, and then a push higher. So I'm hoping we're going to see something along those lines. And when we get to various market breadth indices, then I'll show that we're actually additionally quite significantly oversold currently. So these levels here are already very attractive, and I've been sending alerts to my subscribers to look for long entries, in other words, to be buying. So for example, here is S&P 500 ETF SPY. Several alerts. One alert was sent on the 6th of February. It's obviously a successful trade. Another alert was sent on the 2nd or the 5th of March, also a successful trade. Another alert was sent here on 21st of March, and this is so far an unresolved trade. Notice that my stop would be a trend change way below here. So we need to see a significant selling for me to turn bearish, and then additionally I will look at some of the market breadth indices, and I'll show that overall I think that we're still in a bull market, and I don't see enough selling and enough selling in enough stocks to justify a switch in the posture. And I think the posture is still bullish until proven otherwise. So let's look at that market breadth, and you can find market breadth charts. You can go to my old StockCharts.com chart, or you can go to MasterChartsTrading.com. Here's MasterChartsTrading.com, and then look for my link to this blog, to this chart list on StockCharts. So here are the market breadth. So here is S&P 500 ETF SPY. This is advanced decline line and advanced decline volume lines, and what I see here is I see if anything, a bullish divergence. You can see here advanced decline line made a fresh high in middle March, another basically fresh high here in advanced decline volume line at the same time in mid-March, but we did not yet make a fresh high in the actual index. So to me this looks like a bullish divergence. And then additionally, we are oversold. How do I know we're oversold? For example, here's a good indicator. It's a breadth momentum oscillator, but you can look at pretty much any oscillator, for example, MACD. I don't use any of those oscillators anymore because it is much easier for me to actually look at the price. And since I'm using my own support resistance lines, I have stopped pretty much using any momentum indicators. So for me on this chart, basically, if we're anywhere above this yellow line, we're in a bull market. If we're below this yellow line, if we're making fresh lows here, and I can show you, for example, here's General Mills. Actually, I had a position open in this stock, and I closed it at a loss. But this is just to prove, to show what a bear market looks like. A bear market would look like this. We would see a break below this yellow line, a bounce, and the fresh lows. As you can see, the charts of S&P 500 futures is not anything nearly as I just showed. We're seeing fresh highs. We're seeing simply oversold levels. I don't see a support break below this yellow line or even below this red line. So overall, I think it's a bullish chart, and I don't think we have turned bearish yet. Okay, so let's look at junk bonds, and junk bonds worry me the most currently. So here is the junk bonds ETF JNK. First of all, I think it's a bearish chart, and here's the reason. I see a break below this support line and fresh lows, a bounce, and this is like a dead cat bounce, classic. I put this arrow there during one of my previous videos. You can see that this was already would have been a successful trade if I was trading it in the downside. I was not trading it, but you can see we're again at this bearish levels below this yellow line, and what I'm seeing here is a possibility of further price appreciation. But I think that this is a bearish chart, and I think it should be shorted. And therein lies the problem with the stocks. Why? So here is junk bonds JNK on a weekly time frame, and this is going back to 2008, and JNK was launched in 2007, I believe, here, so the data is relatively new. But just looking visually at these charts here, you can see that in blue here we have the high yield bonds, the JNK itself, and in red here we have S&P 500. You can see that they kind of move together basically. When one goes up, when one goes down, the other one goes down. When one goes up, the other one goes up. So it's they move in lockstep. And below here we can see a correlation coefficient, and you can see that it spends most of its time in the positive territory. This means that junk bonds and stocks correlate. Now, I wanted to see more history, and I couldn't find a ETF proxy, so I had to look at a high-yield fund which had history going back to 1998, I believe. So here's one, it's DHOIX, which is High-Yield Opportunities Fund, basically a high-yield corporate bond fund, so junk bonds. Here also we could see a pretty good correlation. You can see that more or less stocks and junk bonds specifically move in lockstep together. You can see that they've been rallying really hard of late, and what I am seeing here is a possibility of junk bonds rolling over. Does it mean that stocks will also roll over? Not necessarily. You can see that back in 1998, 1999, 2000, you can see that junk bonds were already moving lower while the stock market was still appreciating. So It's possible we'll get something along the same lines. Perhaps junk bonds will take a pause and stock market will continue higher. There are many possibilities. But the important thing here is that maybe it's possible that the junk bonds are going to lead the stock market lower. Now, there's not yet enough evidence to say that yes, indeed this will happen, because once again, I don't see enough selling. I don't see enough downward pressure as shown by market breadth. So, for example, here's S&P 500 again on a daily time frame, and what I see here again is basically oversold levels. Here's a bullish percent index at 40%. Here's QQQ. You can see that it just made a fresh high in March, so I don't see any bearish issues. You can see bullish divergence, if anything. QQQ also oversold. Bullish percent index is only 33%, so definitely oversold. Small caps, same thing. We see a bullish divergence, if anything. Don't see enough bearishness to warrant a bearish posture. So here's again another way to look at oversold versus overbought, and here's New York Stock Exchange Composite, percentage of stocks above the 20-day exponential moving average and percentage of stocks above the 50-day exponential moving average. So this is a pretty decent indicator. You can see we had a deeply oversold levels back in February. Excuse me, and we're seeing similar levels now, so maybe we see another push lower, but I think we're definitely oversold. So I'm already looking to enter on the long side, and in fact I have several positions open on the long side. So once again, overall I think the stocks are still in a bull market. Some pockets of weakness do appear, and we'll get to them in a little while, but overall I think stocks are still bullish. Okay, let's continue to various bonds, investment grade bonds. So I just showed junk bonds. Junk bonds I think are in a bear market. I would avoid them and or short them. Should you so desire, you could probably use options to short them, again, if you desire that. The easier way to short bonds would be to buy an inverse ETF that will play, that you can play against TLT. So TMV would be the triple leveraged ETF that you could play to opposite TLT. You can also do options, but TMV or TBT, I believe. Yeah, TBT also is a good way to play it. You can look for an entry on TBT. TLT looks ripe to be shorted, even like right this instant, basically. But you know, the markets are closed. So overall, I would think that treasuries, bonds of all sorts are in a bear market. Here's investment grade corporate bonds. I think they're in a bear market again. I think if I was wanted to, I could short it, I guess, at around 117, 118. It's a good level. It's approaching that level. Overall, general bond market, aggregate bond market of the United States, I think also is in a bear market. And I sent an alert to my subscribers to basically avoid it. And I have no investment grade bonds currently in any of my portfolios, including the retirement portfolios. Once or if we will see a turnaround for the bonds, and it could happen. We could see a turnaround, for example, if we close for TLT above this 124, 125 level, for IEF, which is intermediate term treasuries. We need to get up to 106 for me to turn bullish. So there is still a lot of work for this, guys, to to basically turn around into a bull market. So overall, bonds I think, are in the bear market. Excuse me, cold. So let's look at some of the bond proxies. And number one bond proxy, of course, are utilities. Again, I'm avoiding utilities basically until or if we get a close above like 53 bucks here. If you really want to short utilities, you could potentially. I would personally, if I was trading it, I would short it at 51 bucks. You can also do it via options. You can buy put options sometime out. IYR real estate looks ripe again to roll over. Last time I sent an alert to my subscribers. I actually opened the position. It was a, let me see, it was a DRV. So there's that trade. So entry was on the 15th of March, and I got stopped out at like a tiny little profit because of this volatility here on the 22nd of March. If I didn't get stopped out, I could have made a nice nice money here. Unfortunately, that's the reality of trading, is that you will occasionally get stopped out. I have one of the subscribers said that they have a position open and they were able to make some money off this. But you can see it's a really volatile stock. You can see it went up and then came right down. So perhaps real estate is trying to bottom. It's possible. We will see. PGX, also known as preferred portfolio, I think it's bearish. I would short it, but it's maybe not worth it because it doesn't really move much. PFF, same thing. Preferred portfolio, you notice that it's kind of trying to top around this red line, and I would be already shorting it basically now, like right there with a stop right there, basically. Okay, what else? PGX, IYR, XLU. So overall, again, bonds and bond proxies are probably in a bear market. And here's XLP, another consumer staples, which is stocks, but you can say that they have a bit of a slight correlation to the way bonds move. So because they pay higher dividends. Overall, not a great chart. I'm avoiding it. I want to see a close above 55.90 currently to contemplate a long entry. For now, I'm basically avoiding consumer staples, utilities, real estate, and preferred portfolio. I'm avoiding all of those. Right, let's continue to the Forex universe. Here is a dollar on the daily time frame. Again, these indicators, these four colored lines, the green, blue, red, and yellow lines, you can find out more on MasterChartsTrading.com. The way I use them is I use these lines as support resistance lines. So currently what I see for dollar index is I see a bearish security. In other words, I would only contemplate short trades. So there's one short possibility here. I'm currently not 100% on where this is going, and I am kind of avoiding Forex trades as more or less. Here's the United States versus Canadian dollar, but you know what? Let me show it to you on the futures chart. Let me see, this Canadian dollar is, let me see what it is, D6, okay, D6, 1 exclamation point. So here what I'm kind of liking about this chart, and this is Canadian dollar futures, is this breakdown on the 16th of March. And if indeed this is true, that means Canadian dollar futures are already in a bear market. And potentially this is a shorting opportunity because we are, well, quote-unquote, overbought. because if we're in a downtrend, we want to look for overbought conditions to short them. How do I know we're overbought? Because we have closed below this support resistance red line, and to me this would be a signal to look for an opportunity to enter on the short side. So potentially we could look for already a short entry with a stop above this blue line, and currently the risk is obviously very low, so you can see that the risk would be really low. On a daily time frame, this would be not that. How many pips is that? It's about 250 pips, which is okay. I mean, this is a daily time frame, so you'll need to, if you have a small account, you will need to basically open a very small position. But the success rate with the way I trade is quite high. I get about 75% success rate currently. So US dollar versus Canadian dollar, basically I'm looking for a so the way currently the way I'm looking at it is it's possible that we have reversed into the bull market. So in this case, I would put my stop below this red line, and I would look to enter on the long side basically now. So right now the risk is really low. So this is what I'm trying to say with the current picture in the dollar. Certain components of the dollar, for example Canadian dollar, seems to be it seems that the dollar is gaining versus certain components of the dollar index. So for example, versus Canadian dollar, it seems that the United States dollar wants to go higher versus Canadian dollar. Very similar to Australian dollar futures. Let me look at the Australian dollar futures and see if there was already, excuse me, there, A6. So similar picture. If I see a close below this red line at 0.7627, then we're definitely reversed. And in other words, if you're doing forex, you can do AUD USD. If we close below this red line, then I would potentially look for to short this pair. But so far, I obviously haven't seen the close, so we could potentially put an arrow there to see if this will eventually come to fruition or not. If it does, then we could see a nice move down, for example, to this yellow line. And when we get to cryptocurrencies, I'll show you that this is not an unusual occurrence to see a move of this magnitude. So about 167 pips or so. Has this happened? Obviously not. So we need to see a confirmation. New Zealand dollar versus US dollar. So far, this is a bullish chart. Notice that it doesn't work all the time, obviously. And for example, if you shorted here, then you would have lost. So for now, this is a bullish chart. But I think if the entire dollar complex turns around and starts gaining, then New Zealand dollar will absolutely follow. US dollar versus Japanese yen. Fresh lows, so Japanese yen is winning this battle. Let me go to futures. There Japanese yen. Japanese yen mini futures. Let me see, I think this is it. Yeah, so far this is still in an uptrend. Is it topping? Difficult to say. I would wait to make a judgment on the US dollar versus Japanese yen until we see a significant push higher, or maybe the rest of the currencies turn around. British pound versus US dollar. So far this is a bullish chart. Recent nice, very nice opportunity was on the October 6th, and you can see basically it nailed a very nice 1300 pip gain. Right now it's still in a bull market. I would wait until we see price action, especially if we come down to this blue line. I want to see the price action confirm bullish posture, or if we're going to continue lower. Finally, euro versus US dollar, the most important out there. So far it is in a clear bull trend. Several alerts, or rather several opportunities were presented. We can see the arrows, various arrows, and for example here's the breakout on the 16th of May 2017, last year. Straightforward, we see a breakout above this blue line and a move higher. And then we look for pullbacks. So we can look for pullbacks around the green line. You can see nice opportunities here. And then right now I'm kind of indecisive. I have a feeling we are going to be pulling back to at least 1.2286 to this green line, possibly lower. If we pull back to this blue line, then overall dollar index could get up to maybe 92. And then we'll see where this goes basically. Now the dollar seems to be wanting to go higher. It is pressuring gold, but not as much as I would be expecting this to happen. You can see that this is XAU USD gold and paper gold, and these are almost fresh highs here for the move. So the chart here is still bullish. What worries me about the gold market is the, of course, gold miners. Here's gold miners GDX. I don't like this chart. I thought here we're almost close below this yellow line, had a big hammer. Notice we're close just above this yellow line, and then had a rally here. But then eventually we sold off, and on the 27th of February of this year, 2017, we see a close below this yellow line, a couple of bounces, and more selling. So right now I'm avoiding all gold-related assets, and we'll see where this takes me. Again, I'm concerned that the dollar will strengthen. If the dollar strengthens even a little bit, gold will get demolished. Basically, here's the gold futures, very similar to XAU USD. What we could easily unravel from here if the dollar rallies, and it will depend on multiple inputs. But overall, again, I am currently avoiding gold-related assets. Here's gold miners, junior gold miners. Junior gold miners broke down even earlier. They broke down on the 6th of February. You can see a close below this yellow support line, bounces, and then potential shorting opportunities already at the red line. So overall, could be, yeah, gold market could be in trouble. Right, let's continue to oil. So here is oil on light crude oil futures. Latest alert that I sent to my subscribers was on the 13th of February. Very nice gain here. So if you're playing via USO, here's that same USO trade that we did. So that's pretty nice gain for this particular instrument. It's about 11% gain. If you use leverage, then obviously more. But again, please, when you're using leverage, then you need to calculate your positions. I teach all of that stuff, by the way, there's training sections here at MasterChartsTrading.com. So you really need to control your position. You need to know how many shares are you gonna buy. Otherwise, you may buy too many shares, and if you have a loss, you will have a devastating loss for your account size. And I don't know what your account size is. But overall, oil currently looks bullish. What obviously worries me is energy ETF, and here's XLE. I had a position in it myself. I thought we broke out. I just bought it on breakout, basically, right there on the 21st of December. Immediately went in my favor. Took lots of profits up here, and then closed my position. So overall, it was a decent trade. It unraveled really hard. You can see a big plunge in early February, close below this red line. So this is like a caution to me, caution. Notice that we didn't really get anywhere, and there is this downward drift to this ETF. If we get a close below this yellow line, I will outright avoid it and possibly short it. So yeah, it's getting there, and I'm kind of worried about it. Here's, for example, XOM, the biggest oil company in the world, if I'm not mistaken, in a bear market. Notice here we had I thought it was a genuine breakout here on the 3rd of January of 2018, went in our favor and then just completely unraveled with a close below this yellow line. And this is the behavior of a bearish security that I'm referring to. You can see we had a trend change when we had a close below the support line. Basically, we made a new low, and then we bounced. Notice where we bounced. We bounced exactly at this red line. So if I was, trading the stock on the downside, I would have shorted it right there at the red line. And you can do it via options as well. And then Robinhood now allows to trade options, so that's another option for you. Here's CVX, same thing. I'm cautioning my subscribers against it. It could still rally, but I am again concerned about this chart, and these are two biggest, components of XLE. So yeah. Let's look at natural gas. Here's natural gas futures. If you decide to trade natural gas, under no circumstances you should analyze UNG. You should never analyze ETNs because they have slippage. They don't follow the actual underlying that well. You always should go to the underlying, and underlying in this case is a natural gas futures. I'm sure you can get even more details, which contract, etc., etc. But because of the rollover of the contracts UNG and then other things like UGAS and DGAS, they lose value. There's something called slippage. So please analyze the actual underlying, in this case natural gas futures. So if you're an aggressive trader, you could potentially already short it with a wide stop. My personal preference is wider stops and by extension smaller positions. And I would do something like that. I would put a stop up at the blue line, but this may not work because you need a very large account to trade in such a manner. But if you're an aggressive trader, you could potentially already short natural gas here. For example, previous trade worked out pretty good, I thought. You already made some, you could have made some money here. Yeah, so natural gas again looks bearish. And let's continue to the markets that people for some reason feel very passionate about, and that is the cryptocurrency, namely Bitcoin. It's been under severe pressure for various reasons. I think number one reason is because in December of last year, somewhere around here, around December of 2017, Bitcoin futures started trading in the United States, and this is giving speculators an opportunity to not only quote unquote invest in the Bitcoin but actually trade it. And please note that currencies, gold, oil, natural gas, commodities of all sorts, they are not an investment vehicle, they are a trading vehicle. So if you are a quote-unquote investor who wants to sit in their positions and hold them for a long time, please avoid currencies and commodities probably too. And just stick with gold, stick with stocks and bonds basically. On this chart we see a bearish security. Why? Bitcoin, in my opinion, became bearish on the 4th of February 2018 with a support break. We had bounces, but eventually they all got shorted, and you can see red arrows. Those would be decent places to short. This one, on the 16th of February, maybe I, how they call it, jumped the gun, but it still would have worked because my stop would have been, above this blue line basically. Again, you need a relatively large account to trade this way. Because you need a wide stop on a very expensive instrument, so you will need a sizable account to trade it in such a manner I'm showing you. But that doesn't mean you can't trade it this way, you just need a larger account. So the support break again, couple of opportunities to short, and the latest one really worked out really well. So if you shorted at the red line on the 21st, 22nd of March, several days here to open a short, nice move, 25% down. Bearish security, do not quote-unquote invest in it. This is a trading vehicle. Please do not invest in a trading vehicle. You will get slaughtered. LTC USD, also known as Litecoin. Also, I showed this red arrow here. 27% gain. Even this trade here from the 1st of February, and another really nice opportunity here on the 20th of February. If you caught this move, this would have been just a beautiful move. And again, for Litecoin, the bear market I think began on February 1st 2018, right there where I'm hovering. Ethereum collapsed 40% from a recent alert, or rather from previous videos. I showed this in previous videos. Clear support break, no bounce even, just immediately selling. Really weak, a lot of weakness here. So obviously bearish chart, 40% down. Bounce is highly likely. Again, I would short it. So long as we're staying below this blue line of 956, we should be shorting this instrument. And let me see, XRP USD, also known as Ripple. This thing is just outright bearish. As early as January of this year, I can see a break, and then just short. And I think there is another stock called Riot Blockchain. Pointed this one out as early as January of this year. Nice big drops here, so you could have shorted it with a options also. All right, if you have any questions or if you want to sign up, please navigate to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on alerts and indicators. I'm currently offering a very reasonable rate of $34.95 per month. In fact, my friends are saying I'm really undercharging. I think it's a fair price. Also, if you sign up for a year, you get a 60-minute phone conversation with me if you're interested. after your 30-day trial runs out. Okay, again, if you have any questions, please send connect to me, ask me, and then we'll go from there. Thanks for watching. Have another great trading week. Bye bye.